Welcome to ForexTV.com. Today's Thursday, April 9th. I'm Tim Kelly with your New York Forex Market Buzz. Dollar is stronger against most major currencies, but giving ground to commodity currencies like Canada and Australia. U.S. equity markets are trading close to session highs. Meanwhile, crude oil is gaining and gold is slightly lower in midday trading. Now for a quick look at the headlines. Initial claims for unemployment benefits in the U.S. fell back slightly in the week ending April 4th, while continuing claims surged to a new all-time high. That, according to the U.S. Department of Labor, initial claims fell to 654,000, following an upward revision of the previous week's claims to 674,000 from 669,000. Initial claims were forecast to come in at 660,000. The U.S. monthly trade deficit shrunk more than expected in February, falling to negative $26 billion compared to the prior month's downwardly revised negative $36.2 billion print. That, according to the U.S. Census Bureau. This is the smallest deficit since December of 2001 and comes against expectations for a $36 billion deficit. Exports out of the U.S. unexpectedly increased for the first time since July of 2008. Today we're joined by David Watts, Senior Currency Strategist at RBC Capital Markets. David, welcome to the program.
Oh, good afternoon. Thank you for having me back.
Well, David, always nice to have you here. You do have the dubious distinction of being our last Market Buzz guest of the week, so, the sky's the limit here.
The one person listening, maybe they're going to get...
Let's hope not. But I do appreciate you being on the show. We saw, as you corrected me before we came on the air, the equity markets seemed to like the earnings news out of Wells Fargo. That sent futures and then equities running higher, and dollar followed it except for Canada and Australia. Of note right now, 131.50 on euro. Could we just be seeing some squaring over the long weekend here, or is this beginning of a downtrend for euro here?
Well, I think there's certainly more than enough reason to be wary of the euro, but you're going to move like this on a day before a long weekend. It does make it sound like it's more position squaring, and I think the Wells Fargo news just basically was a bolt across the bow that really got markets up in arms. And then liquidity conditions ahead of a long weekend, I think everything just basically carried itself on. And then you think about looking at the commodity currencies. I mean, those gains are just stunning. Like the Aussie and the Canadian dollar, certainly an indication that people are getting a greater appetite for risk.
Right. Well, we saw. I'm just taking a data check here. Aussie, for example, had a about 70.50 at the low and 72.01 as the high. And on a day like today, going into the weekend long, Aussie, when risk trades have been bouncing back and forth day to day, perhaps we could see a little bit of profit taking later on, or do you suppose this is part of that cyclical buildup due to the increased commodity prices?
Well, I think that's going to be the debate. I mean, and that's what our traders are. I'm trying to talk to them about right now is that I would have expected something like the Aussie, which has made some spectacular gains over the past several days, if not the past couple of weeks, to begin to take a bit of a haircut going into a long weekend. People being quite comfortable to take their position. But I think the fact that we aren't getting that happening does indicate that maybe people are feeling more comfortable taking risk over a weekend. I mean, you remember back in September and all, you were scared to do anything over the weekend because you didn't know what was going to happen on Monday morning or how the global financial system was going to change. So we are getting clear indications, looking at risk indicators or volatility indicators, that fear is leaving the market. And I think the fact that we're getting these risk-sensitive asset plays doing well into a long weekend is consistent with the idea that people feel confident that they can carry it over the weekend and not have to keep their BlackBerry on alarm mode.
Yeah, sure. You look at some of the yen crosses, pound yen at 146.94. That's at the lower end of the range for today, and Aussie's just not following it. So you could be right about that. On the just moving along here, I did want to come back to Aussie as in relation to Canada, but first, just looking at yen right now at 141, at the high of that range as well. Is that just part of dollar strength today?
Yeah, yeah. And because usually you would think that on a day when equities were doing well, that you would have the dollar and the yen going the other way. And so I think it's actually quite intriguing that dollar is actually doing quite well on a day when equities are doing well. And I think that comes out of the Wells Fargo news, that it sort of lessens the fear about the U.S. financial system. And I think that's specifically on that aspect, that dollar story. But then I think that's where it's sort of feeding out into some of the other commodity currencies. So again, like, that is sort of two aspects of a dollar currency, where the dollar itself is doing well against the yen and the euro, but what it's doing with regard to market confidence is having a huge impact on, like, the Aussie and the Canadian dollar.
Mm-hmm. David, we talked a little bit about the trade numbers, and considering that the U.S. Not buying as much as they have been with these trade numbers, Canada being our biggest trade partner. Is it confounding to you? I find it a bit confounding that Canada has strength, as much strength as it does today.
It is, but I think it's one of those aspects where you've got to separate, say, the macroeconomics from the market sentiment. Market sentiment has been, and clear indications of risk indicators that we look at, market-based risk indicators, and people are comfortable taking more risk. I think they're going to be put to the test in a couple of months, because I think that those trade numbers from the U.S. do indicate that to the extent that U.S. consumers are pulling in their horns, anybody that exports to the United States has still probably got a lot of correction on their export side. So that includes Canada, lots of countries in Asia, and you could actually sort of spin that around and say that's another reason that you sort of want to be long the U.S. dollar in this environment, because there's still going to be a huge fallout on these other economies, which are much more export dependent than the U.S. is. So to an extent, the Canadian dollar strength today did catch me a bit by surprise, but I have been watching some of these risk indicators, and it indicates that people are getting more comfortable carrying risks. So the macroeconomic story might be more important 2 months from now, but right now markets seem to be comfortable carrying riskier assets.
Mm-hmm. Well, speaking of the Asia story, just doing a data check here as well, but David, we haven't heard too much out of China of late, and I don't want to throw a curveball in here, but just want to kind of throw that into the mix and get it in here. China had been very vocal prior to the G20 with these trade numbers and the delicate situation that some feel that China is in. Maybe there's a sleeping giant about to maybe topple over there, but I think it's very odd, and I just wanted to get your quick gut reaction that the China has been very, very quiet in this period following the G20. No real significant statements out of China at all, especially being so vocal prior to it. Does this signal anything to you?
I think the fact that they were vocal going into the G20 was everybody was poised for commentary, and they wanted to get a point across, and they probably feel like they've made their point.
Okay,
so
fair enough.
I think to an extent, they say here are the issues, get a lot of attention, get a lot of focus on it, and then now it's back to the Sherpas and all that doing the discussions, and they'll sort of see what progress is made. But on the broader aspect for trade, I think you get that idea where China is already, I think, indicating that they aren't going to see the U.S. as being the key growth driver in the next little while, and that's one of the reasons the stimulus package in China is proving so important, and maybe so important for commodity prices. We're not looking at the U.S. economy to be the leading economy for growth. We're looking, maybe China on the commodity side, the infrastructure spending that's going on there. But again, you get the perspective that going forward, we can't have a global economic growth if the U.S. is not participating in it. And so we're looking at dollar strength to hopefully make U.S. imports cheaper, begin to sort of have that impact on spending going forward, and then that will slowly get the growth dynamic globally going again. If we get to the point where the U.S. consumers are pulling in their horns, that doesn't occur. Now, both environments are dollar positive, but one is a much better outlook for global growth than the other. And right now, we just don't know which one's going to occur. And China's at the point where they're saying, look, we know that we're very closely tied to what happens in the U.S., and but there's not much we can do about it other than focus on what our domestic issues, which is continuing to boost infrastructure spending. But I think going into the G20, they had something to say. They said it, and now they're basically going to wait until the next opportunity that they need to say something.
All right, fair enough. David, I want to finish up by asking your thoughts on, we're 3-4 hours away from the close of the markets and going into a long weekend. Well, what are you telling your clients at this point? You told us what you think might be happening and that folks are willing to hold on. Places like Canada and Australia, they're running up to pretty heady levels. You think we hold it here? Would you advise clients to keep those long positions, or what are your thoughts going in here?
I think that most of the, like the Aussie and Canada, I think that they've probably had most of their run, and that they're probably going to be going into a little bit of retreat into the close. Actually, the one currency that I am looking at right now, which is actually quite intriguing, is Euro Aussie, which not one that you typically hear about very much, but it is breaking out some significant levels, and we could get that continuing to carry on and dragging on the Australian dollar versus the U.S. dollar with it. But I mean, in general, I'm looking to see markets thin out and people take some profits by the end of the day. But we could get something like this, which would be technically driven and could carry into the close. So, but still, I think my base case is that we are probably going to see some money taken off the table and people quite happy to go into the long weekend with some profit.
Yeah, no doubt. That's probably a logical point to end this discussion. David, I really appreciate you spending your time with us, and have a great holiday.
You too. It was my pleasure.
This has been your New York Forex Market Buzz with David Watt of RBC Capital Markets. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.